Maybe that's tomorrow. Maybe it's 3 months from now. I have no idea. But, alright, welcome to Talking Investing. I am Tom, this is not financial advice, and today I want to talk to you about a growth stock. And the company name is Skillz, and the stock ticker is SKLZ. So I want to go through this because, although it's not a small cap, it's about $3 billion, it's a smaller, high growth company. And as you know, all these high growth companies got pretty much decimated from February through October of this year. Some of them are already starting to recover. This one got decimated worse than most. So I want to go through the chart, show you where it's at, because I think it is oversold at this point. And so I want to run through the numbers. I'm going to just quickly show you what these guys do. I've done a video on them before, so if you need a deeper dive, check my last video. I'm just going to do a quick run through, and then I'm going to get to the chart and talk about valuation and show you why I think that there's some potential here for you guys to add this to your watch list. Okay, so this is the company's website. So Skillz, embrace your inner champion. So the vast majority of their customers are gamers who log on and play games. They team up with creators that create games and add them to the platform and share in the revenue. So this is kind of a summary of the numbers. Right now they have over 30 million active players. They have over 30,000 game developers. They have over 5 million tournaments a day, and they give away over $100 million in monthly prizes. So this is real cash the company gives away. So players have an opportunity to come on here and enter either a one-on-one tournament or a larger tournament, put money in, and potentially win money. So I will tell you this is banned in 10 states, but it is available in the other 40 states in the United States and throughout other various countries around the world. For those that cannot play for money, there are prizes that they can get from the prize pool. But the vast majority of what they do is money, and that of course is what they share with their partners, the game developers. So on August 3rd, they put out their Q2 results. I went through this in detail in the last video, but there's 2 or 3 items that I want to revisit because they're core to my discussion on why I think the valuation on this has some room to grow. So the first one is gross margin was 95% during the second quarter of 2021, in line with the prior year. So 95% gross profit is incredible. It's really hard to get much higher than that. That's almost pure gross profit. So that is a part of the equation that I think is going to make this company work over the long haul. Okay, the second thing I wanted to note was the last bullet point under Q2 financial highlights. Cash on balance sheet of $692.8 million and no debt at the end of the second quarter 2021. They have a very long cash runway to get to profitability. I think this represents like a 5 or 6 year cash runway, not that it's going to take them that long. They're not going to need to dilute their stock by issuing any more stock, so that is another big part of the equation here. They're financially set up very strong. The last thing I want to note from the Q2 results is the company, through current operations and through a business combination, expect total revenue this year of $389 million. So that was pretty much a confirmation of their prior guidance plus the addition of the company that they purchased, which was an additional $13 million of anticipated revenue. So if we look at this chart right here, there's 6 analysts covering the revenue side on Skillz. In the year 2021, which is the current year, you'll see the $389 million. Now that's the guidance the company gave themselves, so naturally that's the average of the analysts' estimates. So $389 million in sales this year would represent a 69.5, so basically a 70% increase in revenue year over year. So that's gigantic growth, and that's basically why I say this is a smaller cap, high growth company. When we look at the chart, you're going to see that this stock has been beaten down over 80% from its highs in February. So next year, 2022, there's 6 analysts covering. The average estimate of revenue for next year is $555.7 million. that represents a 42.5% growth rate. Essentially what I did is I said, let's say for the purposes of trying to create a value for this company, they end up having a 5-year compound average growth rate of 30%. Now, I think that is low because you'll see this year is 69.5%, next year is 42.5%. But let's just assume starting after next year, it's 30% going forward. Well, that would get them within a 5-year window of time. That would get them to $2 billion in revenue. Now, remember, this company has a 95% gross profit margin. $2 billion in revenue would work out to approximately $1.9 billion in gross profit. Now, obviously, they have operating costs that come out of that. Right now, their marketing cost is very large, and that is an effort to obtain new users and hold those new users. So that's a core part of their business. And if they want to grow at the rate that we're talking about, they need to get and retain customers. With $1.9 billion in gross profit, it's not hard to think that this company, after operating and marketing expenses, could potentially 5 years from now be making $500 million to $1 billion of profit per year. So they have about 300 million shares outstanding. So that would be between $3 and $6 a share. So at a 30 PE ratio, if they made $3 a share, that would be a $90 price target. So that's just a simple example of a potential valuation for this company based on some, what I think versus what they're doing, some fairly modest expectations. So with that in mind, right now, this stock is trading at $8.40. And that is almost its 52-week low. I'm going to go to the chart now and go through the chart a little bit, and I'll show you what I'm thinking. Okay, so this is the chart for the last year, and it's only been publicly traded for less than 1 year. So this is pretty much the entire chart. So you'll see in February, on February 5th, they were at $43.33. That is their all-time high. So from December to February, this stock ran up 167%. So you guys may remember that in January and February, these smaller cap growth stocks were growing at an astronomical rate. People were making money hand over fist. That turned around very quickly, and a lot of people lost an awful lot of money between, let's say February and May or June of this year, when things started to level off. Now, for Skillz, things have not leveled off yet. They are right now testing their 52-week low. So I have a few other lines on this chart. For the time being, I'm going to disregard this $46 line. This stock had run up wildly at a time where things were spiraling upwards, so let's forget about that one. So I have a line at $22 where the stock was trading at June 30th. So that was just about 3 months ago. These guys were at $22. They're now at $8.40. So if I do the math on that, that is over a 150% increase from their current stock price. That's just to get back to where they were 3 months ago. If we look here on August 31st, so that was just a little over 1 month ago, they actually reached almost $14. So that would be a 68% increase just to get back to where this company was a month and a half ago. So there is a pretty decent short interest in this company. I think it's about 14% of the float. So that is putting some pressure on this stock in a downward direction. And you can see it's been headed down all year. But this company is having some success. So I believe that at some point this is going to bottom out. Nobody can tell you exactly when the bottom is. So the best that I can hope to do is, for myself, my strategy is to try to dollar cost average in. When I think we're reaching a point where the stock is undervalued, I start to dollar cost average in. So I actually did that in my last video, up around $9 or $10. We're now just a little bit over $8. We closed at $8.40 today. For me, this is another opportunity to dollar cost average in. I think this is way oversold at this point. You can see that's down 67% from where it was just over a month ago. So from its high to its low, from February to now, this stock is down 82%. So that is drastic. It's almost to the point where it's being priced to go out of business. But looking at their balance sheet and their income statement, I have no reason to believe this is going out of business. Things seem to be going well. This stock certainly has fallen out of favor. And so that can keep a price down for a while. So I'm not going to try to pick the bottom. I'm not going to try to guess the bottom. This is not financial advice. I'm telling you the way that I'm looking at this stock. So for me, these points in my mind all represent a stock that is undervalued. So I will continue to dollar cost average into this. And if it goes down some more, unless something changes fundamentally with the company's story, I will keep averaging into this. I know the vast majority of people have given up on this stock. That's another thing that has created downward pressure on this stock. But at some point, the institutions, when they feel that it has run down into the ground as much as they can run it down, at some point, they're going to start moving back into this stock. So at that point, and who knows when that is, I don't have a crystal ball, so I don't know. Maybe that's tomorrow. Maybe it's 3 months from now. I have no idea. But if and when that happens, there could be some rapid price increases. So I'm looking at over the next 3 to 6 months, I would say the first thing they should be able to do is just get back to where they were 5 weeks ago, which would be over a 60% increase in their stock. And then if they could get back to their June 30th level of $22, that would be about a 160% increase in the stock. So even if that was a 12-month price target, which I don't think is unreasonable, you're talking about 160% gains in that period of time. So those are my price targets. Again, I don't have a crystal ball. This isn't financial advice, but that's the potential upside that I'm looking at. So from a risk-reward standpoint, remember, these guys had almost $700 million, so they're not going anywhere anytime soon. So the downside to this, yes, could it keep going down further? It could. But I believe there's an awful lot less downside than there is upside on this one. So from a risk-reward standpoint, for me, this one's a great equation. So those are my thoughts on Skillz. If you enjoyed this video, please smash the like button. Also, please subscribe to the channel and hit the notification bell so that you never miss a video. Thank you for watching, and we will see you in the next one.